Bill Baruch's back with us, president at Blue Line Futures. What do you think, Bill? Is it time to take a stab at the market rallying, or is it too risky with inflation looming on Friday?
I don't think it's risky. I think there's been some good opportunity this week, and on the future side, we've stepped back in and started building some positions with those micro S&Ps and micro NASDAQs. I expect inflation to overall cool, but my thesis has been, I may have said this to you before, I never looked at April and May to be inflection points for inflation. That's going to be June, July, and August. And that starts getting released in July, August, September. And it's going to build up to an inflation showdown at Jackson Hole. I think inflation cools, so I think we have a window, into, say, mid-July or so for that next Fed meeting, that this market could start to, elevate higher. I think people are offsides, underpositioned, and starts encouraging buyers to step in, some short covering. Now, that takes you maybe to the S&P, to the 50-day moving average, 4,250 or 4,300.
Okay.
But then from there, if we actually see inflation cool this summer, we could rally another 10%. We're back to record highs. That's how I'm viewing it. If it doesn't cool, then you got to be very defensive.
All right, so you're looking at potentially the decision point a little bit further down the road here, not necessarily a big make or break number on Friday?
Yeah, but we'll surely see the market react, and that's something, I was hoping to kind of see some of this market elevate higher into the number Friday. I'll definitely manage my risk, because that's on the trading side. But when it comes to what we're doing on the wealth management side, we're fully invested in this market. We've been protecting downside, all year long. And but walking you through last time I was on, that inverse head and shoulders, the play out of the bullish move at the end of May. We had taken all our hedges off. I mean, the market was down 20%. So at this point, we're playing for the upside. They've raised a tiny bit of cash ahead of non-farm payroll, but other than that, I'm upbeat this market. My research goes out every single day to clients, and we have had a bullish to cautiously bullish bias. It's an actionable bias that goes out in the research each day, and it's been bullish to cautiously bullish on stocks.
And that's the message that I've received from you when you're here, in addition to your bullish commodities case, which looks to be paying off. How far do we get in this move for commodities before it eats into the bullish stock case? Can you have both at the same time in this market, or eventually will you have to pick one?
It's going to be a tough one, because I think crude oil is at a level that if we get above 125 or so, it could start to hurt the case for the equities.
That's a pretty interesting thought. So basically, WTI kind of at this point fighting with those highs. If we have potential breakout, then the commodity complex follows as a whole.
I think if crude goes, it could start to pressure other contracts. Though, take a look at copper, because you're going to look at some of the overall risk on move. Copper had a big move last week on the heels of talk of China reopening, but it's come in a little bit. I think if crude really is the focus and starts to move higher, there's going to be, I think, it really start to crater within other contracts, other commodities and other assets. So I don't think it has to be tethered together. Say crude breaks out and copper runs with it. We may see that from the start, but then you're going to start to see the erosion of the actual, the economic growth prospects as crude, moves at above 130, if that were the case. And I wouldn't be surprised to see crude oil go to $200 at some point if these fundamentals stay on track to where we're seeing them. It could be a really ugly winter, but it's really going to erode the economic growth forecast. And if crude oil continues to go higher, then we're talking about also inflation numbers that are going to be on the heels of that. It may not be this summer. We could see those inflation numbers pick back up later this year, and the Fed and other central banks are going to have to get very hawkish, which then would turn other assets, other commodity assets, and lower because of that, as we've seen many times when you hear this hawkish rhetoric.
All right, we got next week to look forward to too from the Fed. So inflation first step, and still being able to be long commodities and hope for a bull case in the short term. Thanks, Bill. Appreciate the update.
Thank you.
Bill Baruch, president of Blue Line Futures.